probably by my estimation, at least $10 trillion of bank equity globally. They can literally be wiped out if the system fails. It doesn't mean depositors don't get made whole, but in the case of Cyprus, they had bank bail-ins, right? This is another reason why you have to be very careful. A bank bail-in basically means depositors got a haircut as well. So this is the risky nature of banking. Just because you're JP Morgan doesn't mean you use a different formula for banking. The JP Morgan has capital ratios which are similar to these other banks. Perhaps JP Morgan managed their interest rate risk better and hedged it more properly. But look, you can look at the available for sale securities and the mark-to-market losses that are on Bank of America balance sheet, and you're blown away. You're like, oh my God, that would vaporize the lion's share of their equity as well if they had to sell or mark-to-market that portfolio. So at the end of the day, banking is banking. There will be more failures. Will they be cataclysmic failures? That's the difference. Contagion, where the system breaks down. Possibly. My hope is no. But I'm telling you, you saw Credit Suisse fail. Then you've seen, and Credit Suisse largely failed because of initial butterfly wings over in America. But listen, a few more failures in regional banks in America, and all of a sudden, Deutsche Bank is on the ropes. Imagine the idea that I laid out with the USA. Take that for the USA, add in all the G7
G20
nations. Go all the way down to the G20. You'll come up with a number that's over $700,000 US per Bitcoin. Using credit default swaps. Hey, it's trading under 30,000. It's trading at let's do the math. It's trading at 1/27th of its intrinsic value, according to, I say the word intrinsic, you don't agree with me, I don't care. It's still 1/30th or 1/27th of the value that you could put on top of Bitcoin as a valuation metric. I don't sweat it. It's so stupid cheap. Don't overthink things. I could even give you a higher target price based on a share of total addressable market. I don't want to go there. I'm just going to say, if you own 0 Bitcoin, you're a fool. It is the best asymmetric and
The banking crisis is still going strong. This week we had more regional and mid-sized banks like the First Republic Bank crash. Yesterday we saw the PacWest crash as well. And according to Greg Foss, a trader and portfolio manager with 30+ years of experience, this crisis is still far from over. So everyone is at risk, as banks can wipe out your wealth suddenly if your deposits are used and vaporized from the system. As we know by now, the solution is Bitcoin, a hard asset that's not being controlled by anyone and whose price is increasing through time as opposed to fiat, which is losing value. In today's video, Greg Foss will make another Bitcoin price prediction that may shock you if you have not seen his math before. Greg will explain what's happening to the banks and how that fuels Bitcoin prices to explode to the next level. And this is inevitable. It's just a matter of time. First, in case you don't know who Greg is and why you should pay attention, here's a quick intro from him and his explanation of the banking crisis.
I'm a 60-year-old. I've been working in what I call the fiat Ponzi world for over 30 years on both Wall Street and Bay Street. Bay Street, I'm a Canadian. Now, as far as hard assets go, I support hard assets. They can range from real estate to equities to gold and Bitcoin. I believe Bitcoin actually is the best hard asset of those. But I spent my career trading bonds, and I would term bonds a soft asset because bonds are basically nothing more than a fiat contract. And given that they are a fiat contract, they are programmed to debase just like fiat. So I support hard assets. I own gold. I own Bitcoin. I believe Bitcoin is the best of the hard assets, but you don't need to own all your hard assets in one silo. So I mentioned to you, I went to school in the USA. This was back in 1986. And when I started school in the US, there were 15,000 banks in the US, 15,000. And today there's less than 5,000. So in my 30-year career, over 10,000 US banks have been closed or merged. And that trend will continue, but there's still 5,000 of them. There's probably 25 meaningful regional banks that are going to fail, including the ones that have already happened, because First Republic Bank was a top 20 bank in the United States. When I say top 20, that's measured by the size of their balance sheet or the amount of loans they had outstanding. So PacWest is about 1/5 the size of First Republic. As I mentioned, it's $40 billion worth of loans. But, this is a domino effect. There is contagion risks. This is like the S&L crisis back in the 90s, okay? Savings and loan crisis back in the 90s. One leads to another, leads to another, leads to a lack of confidence. There's two things that concern people, right? The first is that the banks are at risk of mismarking or not mismarking. The valuation of their treasury portfolio has been carved, and therefore the equity valuation of the bank has been vaporized. The other side is the deposit side. Yeah. How much is insured? But what can you do with those deposits? You can now take those deposits out of the bank and put them in treasury bills and earn 5% versus bank deposits that get paid less than that. So this is all part of this is a result of the Fed increasing rates to make alternative to deposits, so alternative investments to cash deposits like treasury bills, that much more attractive. Not only to mention, oh my goodness, if I'm worried about the bank failing, I'd rather have my deposits in treasury bills than I would in the deposits of a bank, right? So you can see how this is all circular. I'm going to quote former Dallas Fed Chairman Robert Kaplan, when he said we're only in the first innings of this banking crisis, regional banking crisis. And I'm also going to quote Charlie Munger, who I don't always see eye to eye on, but he said he believes there are another shoe to drop in the regional banking crisis as well. So just this afternoon is another example, and this isn't going to end. Despite what Jim Cramer says on TV, this is not going to end with First Republic, okay? That's not how banking works. Banking is ubiquitous. Every single bank is levered 25 times to its risk-absorbing capital base, which is to say you only have $4 to $6 of equity capital for every $100 of loan you make. If that loan falls in value by more than $6, your equity is vaporized and you're chewing into depositors' money, because $6 is equity capital and $94 is depositors' money on every $100 of loans. I have lived through 5 banking crises, okay? I started my career during the Latin American debt crisis in 1988 and the Brady Plan to solve the Latin American debt crisis. It doesn't change. It just gets dressed up in different colors and comes as a different calamity. And this one is coming based on interest rate risk. So mismanaging the interest rate risk in their portfolio by purchasing long-term treasury bonds and funding them with short-term deposits because they were convinced Powell was right that inflation was going to be transitory. It wasn't. Now, here's the big problem. That's interest rate risk. Coming very quickly behind that is credit risk in the commercial loan real estate portfolio. 50% of commercial real estate loans are held by the regional banks.
Yeah.
And tell me they're not going to fall by more than 6% of their value? I don't think so. I think there's another shoe to fall, or as Elon says, it could be an anvil.
And this is how people can lose trillions due to these collapses.
Everybody assumes that banks are too big to fail, and largely the biggest banks are too big to fail, which means they will get bailed out. But it doesn't mean that shareholders get bailed out, and this is where a lot of money can be lost, okay? There are probably, by my estimation, at least $10 trillion of bank equity globally. They can literally be wiped out if the system fails. It doesn't mean depositors don't get made whole. But in the case of Cyprus, they had bank bail-ins, right? This is another reason why you have to be very careful. A bank bail-in basically means depositors got a haircut as well. So this is the risky nature of banking. Just because you're JP Morgan doesn't mean you use a different formula for banking. The JP Morgan has capital ratios which are similar to these other banks. Perhaps JP Morgan managed their interest rate risk better and hedged it more properly. But look, you can look at the available for sale securities and the mark-to-market losses that are on Bank of America balance sheet, and you're blown away. You're like, oh my God, that would vaporize the lion's share of their equity as well if they had to sell or mark-to-market that portfolio. So at the end of the day, banking is banking. There will be more failures. Will they be cataclysmic failures? That's the difference. Contagion, where the system breaks down. Possibly. My hope is no. But I'm telling you, you saw Credit Suisse fail. Then you've seen, and Credit Suisse largely failed because of initial butterfly wings over in America. But listen, a few more failures in regional banks in America, and all of a sudden Deutsche Bank is on the ropes. And Deutsche Bank is way more levered than Credit Suisse was. Its derivatives book, which is off balance sheet, is way larger. And Deutsche Bank is a globally systemically important bank called a GSIB. And this will not be allowed to fail outright. It doesn't mean the shareholders won't get wiped out exactly the way Credit Suisse shareholders did. So these are the type of contagion events that slowly then suddenly the system breaks because of the leverage in the system.
How does Bitcoin fit in this massive mess in the traditional financial system? Is it just a safe haven for investors, an opportunity for profit due to the expected upside? Listen what Greg has to say.
You can look at Bitcoin as being insurance on the failure of a basket of fiat currencies, a basket of sovereign debt. And in that calculation, you can take the open market CDS spreads and multiply those CDS spreads by the outstanding debt of a nation. And let's do it really quickly for the USA. All right. 5-year CDS to make the math easy on the USA. 5-year CDS on the USA, we're going to use a number of 40 basis points. That's low, but that's an open market credit default swap rate on 5-year CDS, which means it's got an 8 basis point per year tenor. Okay. You take 5 years, you divide it by the 40 basis point cost of the credit default swap. What does 40 basis points mean? It means it costs you $40,000 a year to insure $10 million of US debt against default. So if 5 years is 40, what would a 20-year CDS equivalent? They don't trade at 20 years, but let's put out a 20-year number. 20 times 8 per year gives you 160 basis points. Now, the total funded and unfunded liabilities of the United States of America is approaching 200 trillion US dollars. 30 trillion or 32 trillion of funded debt, so that's debt that's existing in the system, and another 170 trillion of unfunded liabilities, which include future Medicare and Medicaid obligations and Social Security to the public. So $200 trillion is the liability just of the United States, Michelle. You take 160 times 2 trillion, 200 trillion, and you get, I'm doing it in my head, $3.2 trillion would be the implied insurance value on the United States. $3.2 trillion just on the United States. What is Bitcoin trading for? Well, about $500 billion. Oh my God. If people embrace the thesis that Bitcoin could be viewed as credit default swap insurance on USA and all other countries, well, it's trading about 1/7 of its value just for the USA. And here's the really cool thing. There's no counterparty risk. Bitcoin is not an insurance company. When you hold it in self-custody, you don't have to worry about buying this insurance from an insurance company like Bear Stearns. See, when I was trading credit default swaps, I had an exposure to Bear Stearns that meant I thought I was going to have insurance from Bear Stearns. And guess what? When Bear Stearns looked like it was going to fail, I had to run out and buy insurance on my insurance company. You see how this whole circular thing works? There's a way to value it, and there's a way to appreciate that it has no counterparty risk. And then you could say to me, well, Greg, isn't the same thing said about gold? And I'd go, yes and no, because gold has no fixed supply. It's not transferable or portable like Bitcoin is. And most importantly, it's not auditable. There is no blockchain to audit it. And I still like gold, don't get me wrong. But at the end of the day, Bitcoin is so superior as not only a technology, but also as an auditable asset. That is why I love Bitcoin, as effectively, in my view, from a credit trader's perspective, my whole life, it is the most beautiful insurance policy on the failure of fiats globally. The USA will be the last one to fail, Michelle. The USA will be the last fiat to fail, but there's 150 other fiats that will fail before the USA, and that's why it's valuable to places like Argentina.
And from his perspective, this is the value Bitcoin should have.
No, man, because everybody can use different ways of valuing it. Other people can value it based on a technology. Other people can value it based on an information transfer protocol. So technology stock guys who I know have bought Bitcoin in Canada, they think of it as a technology, not as an insurance product. And then credit guys think of it as an insurance product. And you may think of it as totally something else. Store of value, store of wealth. All of this is what determines an open market price on Bitcoin. And that's the beauty of unmanipulated market, okay? Bitcoin is unmanipulated. The fiat Ponzi is manipulated by guys like Raoul Pal, who gets up there and tries to manipulate your cost of funds using antiquated technology and rear view mirror driving, okay? This is the problem with capitalism today. Bitcoin is a free and open market. It's a thing of beauty, and it means different things to different people, and it can get valued in a whole lot of different ways. Ultimately, it settles on a market price that is not manipulated. It's beautiful. Now, let's not go too far, but just imagine the idea that I laid out with the USA. Take that for the USA, add in all the G7 nations. Yeah, go all the way down to the G20. You'll come up with a number that's over $700,000 US per Bitcoin. Using credit default swaps. Hey, it's trading under 30,000. It's trading at let's do the math. It's trading at 1/27th of its intrinsic value, according to, I say the word intrinsic. You don't agree with me. I don't care. It's still 1/30th or 1/27th of the value that you could put on top of Bitcoin as a valuation metric. I don't sweat it. It's so stupid cheap. Don't overthink things. I could even give you a higher target price based on a share of total addressable market. I don't want to go there. I'm just going to say, if you own 0 Bitcoin, you're a fool. It is the best asymmetric investment opportunity I've ever seen in 35 years of managing risk. And we're listening to guys like Taleb and Charlie Munger, who are conflicted fiat Ponzi fools who are trying to say it has 0 intrinsic value. I'll take the other side. Thank you, sir. Because I think it could go many times higher. Thank you.
Greg's interesting perspective about Bitcoin is how it should be considered energy and a way to conserve energy, something that Michael Saylor, who's also an engineer, has been saying for a while. So while everything else loses value over time, Bitcoin can conserve it.
In the law of conservation of energy, it's drilled into your head as an engineer. And I look at Bitcoin as digital energy. Okay, so I think very simply, in a closed system, if you're going to sell your valuable natural resource energy, oil and natural gas, for fiat dollars that can be debased, you're not, there's an alternative to sell it for digital energy. So you're selling natural resource energy in trade for digital energy that should maintain its value. and increase in value over time because of its fixed supply, I'm like, man, that's a better way to price my valuable natural resource energy. Is it going to happen overnight? No. Should Canada do it? I would love Canada to do it, but we're not smart enough. But you know who is smart enough? Vlad Putin. And I'm not supporting the man, but he didn't just fall off the turnip truck, okay? He knows that selling his valuable natural resource energy for debasing US dollars is a loser's game. And he's moving away from that. And I believe there will be time within my lifetime that oil and natural gas are priced in Bitcoin, because I'm an engineer and I believe it's the most logical pricing mechanism. US reserve currency status? I hope not. If the USA is smart enough to embrace Bitcoin, it could also maintain US reserve currency status. What will get debased is US reserve asset status, which is US treasuries. Bitcoin will replace US treasury bonds as the global reserve asset. All of these are part and parcel of a progression. When will it happen? Look, I can give a target, but not a time. I'd be a fool to do both. But think about the law of conservation of energy.
This is Greg's portfolio allocation and recommendation to close this fantastic interview. Please pay attention.
I own about 25% Bitcoin in my portfolio, but it didn't start at 25%, okay? I was lucky enough to get into Bitcoin over 7 years ago. I've continued to research it my entire career, and I've also seen the thesis of why I own it come more to fruition. Because the response to the COVID crisis ensures that the debt spiral globally, we can never escape it. In fact, it's accelerating. It's only grade 11 math. So when you see that happen and the information changes, meaning you have even more conviction, own more Bitcoin. But to the people out there that own zero, do me a favor and at least get 1 to 5% of your portfolio in Bitcoin, and then worry about the other 95% of your portfolio, please. That's the way to manage risk.
Did you enjoy this interview? Do you agree with Greg about Bitcoin's potential value? Let us know in the comments below. And if you want to see more videos like this, please leave a like and subscribe. Thanks.